Hey guys, Youthful Yields here. Today we're going to be going over the portfolio for the week. So to start off, taking a look at the global or the S&P 500 market, we can basically see that, as per usual, it's kind of a mixed bag. Financials seem to be doing pretty well. Technology on the other side, mainly semiconductors, not so much. Same with the internet content information, aka communication sector. You can see AVGO went down 7.7%. I think just Friday or Thursday alone, it went down 11%. So kind of crazy. Oracle down almost 13% for the week. So a lot of movement. Um, this is mostly at the cost of, debt to income ratios on, a lot of stuff, as well as just announcements of partnerships and whatnot. So moving on, if we go take a look at the week in review, we can see that our portfolio actually did pretty well this week. Well, pretty well in the comparison of the S&P 500. So you can see here that it was only down 0.51% as a total, where Composer was down 1.42%, M1 Finance was down 0.26%, and Webull was up 2.54%. So not too bad. Although, that being said, there are still some considerations to take care of. First of all, we are still lagging behind in the month of December in terms of S&P 500. You can see that we're down 1.07%, while the S&P 500 is only down 0.23%. So that's something to take in consideration there. We're pretty close, though. If you can see, total year since May 19th, we're at 13.55, where SPY is at 14%. So very close there. And this is actually a good moment for a lot of the algorithmic trading stuff, because typically what ends up happening is there is this low point, some kind of not crash, but for example, S&P 500. Well, S&P 500 was only down 0.57% for the last week, but let's say it dropped like 4% or something crazy. That's a really good indicator for a lot of algorithmic rules to be set up to where it basically goes into overdrive, recognizes that there might have been an oversale, and shoots right back up in the opposite direction before the S&P 500 can. Because obviously that's, or would throw a leverage in there. The S&P 500 just trades, one ticker itself, so, or SPY in that. So, there's some things there, but overall not too bad. So yeah, not obviously not a crazy like win or anything for Composer. But these kind of things are expected, and this week is like not even that bad. You can see from when we really started with these 4 or 5 strategies. Let's just double check. 5 strategies was on the 20th of November. And since then, we are only in a max drawdown of 2%, which is the current max drawdown. The S&P 500, that's less than a month, so it's not really anything to go crazy over, but you can see the other stats here. Moving into Composer more specifically, we can take a look here. My biggest holding here remains Concise EM Signals, unleveraged. You can see here, this went down 1.46%. I think a lot of that was from, I want to say on Friday we were holding QQQ and TLT. It was mostly this, except instead of these being split, it was just holding QQQ and TLT. And QQQ didn't do very well on Friday. You can see it was almost down 2%, and TLT is the same, down 1%. So overall, not super crazy good on that. But if you compare that to some of the more leveraged strategies, the more popular in the Composer community, such as TQQQ or the Holy Grail, you can see these both were holding TQQQ at the time, and those are almost down 6% just on Friday alone. So that's something to keep in mind there. We could take a look actually at this last week. So that would have been from, we could just do from like the 7th, December 7th. I don't know why that took so long. And then 2025. I don't know why it also does this. It's quite annoying, but what the heck. December 7th. There we go. You can see down 5.34% for the week. So, yeah. Whereas this one, if we take a look at the week, I think actually it might have been already there, but that's fine. If we take a look at just the week, we're down about 1.16%. So not terrible, but yeah, I mean, nothing to really report on more specifically on each of these, but it's not, unsurprising that this happened. We were kind of in somewhat of a leveraged, or not a leverage, somewhat of in a bull kind of position, and between a bull and kind of sideways market. So these don't do amazing sideways markets typically. It just kind of matters what your underlyings are. For some of these, it's like QQQ, and then it's fine. For some of these, like I think that's what this one's holding. But for some of these other ones, when they're in this more leveraged position, those kind of chops end up killing your portfolio quite easily. So you need a lot of those big movements for you to really get a payoff. But going into the M1 Finance portfolio, if we go here and look at the week, you can see it's down a little bit. Not too much, but there are some big hits here. So we'll look at the ups for this week. First of all, the highest was Visa, super nice at 5%. We can see industrials. The highest there was RTX, and last but not least, we have consumer staples. The highest there was Pepsi, almost 4%. Now, in terms of the lowest, semiconductors, like I said, we had quite a big movement on AVGO. We also had equal amount of movement in the rest of the sector, AMD and NVIDIA. We also had some technology losers this week. The main one was Google. And then we also have utilities here. So that one was Southern Company, but the other ones were also kind of losers. So kind of sucky, but in terms of dividends and stuff, I believe we got two. We got Eli Lilly. We had Southern Company, we had Eli Lilly, we had ExxonMobil, Chevron, RTX, and Microsoft. So pretty nice. That totals around, I want to say, 5, 11, probably close to like $25, $23, something like that. So that's not too bad. I was about to say free money, but close to free money. In terms of the unrealized gain top, AVGO, despite having that terrible week, still is one of our largest gainers for this last year. So that's pretty nice at 58% up. AMD still killing it though. So yeah. In terms of the biggest losers, we have 1, 2, 3, 4, 5, 6, 7. AMT is still not doing very well. Same with Procter & Gamble and Costco, but we can only hope. So last but not least, moving into the Webull portfolio, like I said, it went up a little bit this week, not too much. You can see that kind of here. So on Monday, it went down about 5%. Tuesday went down about 6%. Then it went back up 4.7, 1.2, and then almost 8% on Friday. So pretty nice. This is kind of like a small hedge in our portfolio. So nothing too crazily unexpected here. But yeah, same as last week. I'm not really looking to change anything. I'm going to try to stick with as much stuff as I can, as long as I can. That's my strategy. And realistically, I might be sticking with this. I've been saying this for a long time that I've been really wanting to basically decide by the end of the year what I'm going to kind of run. And I'll show you why. This is the main reason why is these just do very well in terms of their risk, like their deviation. So you can see here that these are all pretty closely matching. I've shown these for a while. Now, most of them have traded pretty much the same stuff. So a lot of this is not going to be super crazy because typically stuff that shifts out of your portfolio, like for example, something that trades every single day is going to have a potentially higher deviation because there's more checks that have to be kind of met, right? Whereas stuff like TQQQ or FTLT for short, this and the Holy Grail, and I mean, all of these have held pretty much their same exact symbols that they've held since November 20th. So that's why these are so low. This one has bought various amount of days. You can see that in the history tab. You can see that we've, bought, I was gonna say, I don't think that's all of them, but you can see here since, and that's not even all of them. But yeah, we have quite a big number that are like shifting in and out. So even with that happening almost, every day, it still does very well in the deviation, which is why I kind of stick towards it. So, but anyways, guys, that is it from me. And as always, wish you guys well to the future.